Hey, what's up, gang? This is Mike with MrNoFluff.com, and today's lesson is about how to buy a rental property subject to its existing mortgage. Now, before I dive in, I want to talk about what is a subject to, and then how to find these deals. Okay. Now, a subject to is a creative financing strategy that I have implemented since 2006, where I buy 99% of all my rental properties by just taking over the seller's existing mortgage. Let me put it another way. Is a strategy, is a way to buy rental properties in America and many of the countries that have central bankers where I don't need credit, I don't need a lump sum of money, nor do I need a bank or a lender. Why? That's a great question. Because I deal with homeowners direct. Okay. So a subject to is a strategy where I'm able to buy rental properties by dealing with homeowners direct without going to a bank. The way it works is all I do is I just simply step into the seller's shoes and I just take over their payments. Now, before I forget, thank you guys for having 11,000 subscribers on my YouTube channel. We're having a massive sale at MrNoFluff.com, including all my courses, advanced courses about subject to, owner financing, cold calling, so on and so on. So let's continue going forward. Now, what is a subject to? Okay, subject to is a strategy where you can buy rental properties without a bank, without credit, without all the money. The way it works is, simply put, this is the simplest way. All I do is just take over the seller's mortgage. That's it. So instead of the seller making the payments to their bank, I'm making the payments for the seller because I own the property. That's right. The deed is in my name. So I'm not doing a rent to own. I'm not leasing it. I actually get to own the property from day one. I get the key. The title is in my name. And all I do is just make the payments for the seller. That's called a subject to investing. Now, a lot of people say, Mike, is this legal? That's a great question. Well, if you go type in Google HUD 1, I believe, if I'm not mistaken, I think it's row 203, if I'm not mistaken, that says subject to the existing mortgage. So simply put, it's on a HUD 1. If it wasn't legal, why is it on HUD 1? And I've done many closings. No title company has ever had any problems. I even went to title closings where I got $60,000, $80,000 checks. No problems at all. Now, there is something that you have to know about, that when you buy a property subject to, there are some small risks associated with it. For example, one thing that's called NOS, or actually DOS, due on sell clause. Okay, what does that mean? That the banker that you're making payments to can call up the note. They can foreclose on the house if they choose to. Since I've been doing it since 2006, it has never ever happened. No bank has ever called me and says, "Look, Mike, you're making payments on this house. It's a performing loan, and we want to foreclose on it." It's never happened. Can it happen? Absolutely. Has it ever happened to me? No. There are strategies that I take, steps that I take to protect myself so the bank doesn't call that note in. If you want to know what those strategies are, go to MrNoFluff.com and download my owner financing for profit. It's only just like $100 or $200 versus the actual normal price because it's on a flash sale, 50, 60, 70% off. I'm not sure. Go to MrNoFluff.com. So there are risks associated with buying property subject to, but in my opinion, the way I do business, the risks are small. They're way smaller than if I went to a bank and said, "Mr. Banker, can I please get my 10th rental house? Mr. Banker, can I get my 100th rental house?" Okay, I don't have to do that. Nor do I have to sign, right, a personal note. What does that mean? Well, when you buy a house, you let the banker ruin your credit if you default. At the same time, you allow the banker to come after you, to sue you whenever you default. When I buy these homes, I structure it in a way that I tell the seller, "Look, if I default, all you can do is get the collateral. You can't come after me personally. And if they don't agree, I don't do the deal." And if you want to learn how to set that up, go to mrnofluff.com and download my Owner for Financing Profit course that teaches you how to structure these deals, guys. Okay, so there's a little bit of risk associated with it, but the risk for me outweighs traditional ways. What is traditional ways? Me putting my company EIN number, me putting my own personal social security at the line, me personally signing for the debt. I never do that. I never sign a personal note. Okay, all I give is the collateral in case I default, which I've never defaulted before. So there's no reason for anything to happen. But if I did default and if I didn't make the payments, then the seller could just take over the house and that's it. But most people, when you go to a bank, not can the bank only take over the house, but they can come for you personally. Not only can they shatter your credit, but they can come and sue you for the deficiencies. Okay. That's why I don't deal with bankers because they're crooks. So the way I do this, I deal with motivated sellers. And so now I've talked about what is a subject to, what are some cons about it, right? Now let's talk about some of the benefits. One of the primary reasons I love buying subject to is this is one because I get to beat the amortization chart. What does that mean? Let's say I do some marketing, I find a motivated seller, and the seller's been living in the house for let's say 10 years, and now they're going to a divorce and they're willing to let me just take over their payments. Guess what? For the first 10 years, that homeowner, every payment they made, majority of it, if the payments were this big, this much of it, right, the majority of it went towards the interest called amortization. As time passes, okay, then the payments that the seller makes now slowly but surely goes towards the principal, okay, and the principal gets bigger and bigger. So simply put, when I take over someone's mortgage that's just behind in payments, or they're not behind in payments, but they live in the house for 10 years, I'm beating the amortization clock because when I start making payments, I'm paying the principal reduction versus just the interest rate like most people do. That's one of the primary things because if you don't know how amortization works, then you're getting screwed. One simple example is if you borrow $100,000, by the time you pay it off through the amortization chart, doesn't matter what the interest rates are, you're going to be paying 3 or 4 times that amount. So you borrow 100, by the time you pay it off, it's almost like 300,000, okay, in 30 years because of the amortization part, which is very, very toxic. Another reason I love subject to investing for my rental properties is because I don't have to beg a bank. I don't have to put my credit up. I don't need a big lump sum of money, okay? I don't need an inspection. I usually don't even buy a title policy, okay? Why? Because I'm in total control. So whenever I do subject to investing, I'm in total control. It's like I am the pilot of my plane. I'm not deferring that to someone else, okay? So there's a lot of benefits of owning subject to properties. You could have massive cash flow, especially in 2019. Why? Because interest rates at all-time low. We have in the history of America, interest rates have never been so low before. So what does that mean to me? Well, with that, or to you, or anyone that owns a rental property? Well, whenever you take someone's payments and they have ultra low interest rate, that means that there's going to be a massive cash cow. Why? Because the monthly payments are so low that includes PITI, which is principal, interest, tax, and insurance. And when you do the difference between the rental and the PITI, it leaves a big spread, which means massive, massive cash cows in today's market. Thank you to the Federal Reserve for keep lowering the interest rates and keep lowering the interest rate, okay, which is amazing. Now, another reason I love subject to is because if I went to a bank and say, Mr. Bank, I want to get a loan to buy a house for investment. They're not going to give me the best rate they have. Why? Because this is a commercial deal. So when I work with a homeowner direct and I just step into their shoes and buy the house subject to his existing mortgage, I am getting the ultra low interest rate. Why? Because whenever you're homestead, like you get a loan and you're going to actually live in it, guess what? They give you the lowest interest rate. But if an investor would buy the same property, their interest rate would be a lot more because it's considered a commercial deal or commercial loan. So as you can see, the odds just for me are so much in my favor to buy a house subject to versus going traditionally, hiring a real estate agent, going filling out a loan application, sitting there pleasing, putting this much percent down, paying all those junk fees at the title company, all that stuff. I don't do any of that. Okay. Now, how do you find these deals? Okay, that's the most important part. So there's like 3 or 4 different things that are very important when you do a subject to. One, how do you find these people? 2, you got to know how to filter them because you don't want to be talking to people that are not motivated because you're not going to get a deal. Okay. 3, after filtering, you have to know how to structure these deals. If you don't structure these deals correctly, then you can't get it. I mean, I hear so many professional investors that I train in my courses. They say, Mike, how do you get these deals? How do you get these deals? Well, first of all, I give offers for owner financing. Most people never give offers for owner financing because they don't know how to structure it. Well, guess what? Join my profit sharing coaching, where when you cash a check, I cash a check. And I teach you how to structure these deals. So a couple of things you need to know about a subject to is how to find them, how to filter them, how to structure the deals, and all the paperwork that goes into it. Because a subject to deal has a lot of moving pieces. Okay. There's a lot of paperwork that needs to be filled out. And guess what? If you don't fill out all these paperwork, 3 years down the line, you're going to be in trouble. Okay. And how do I know? Guess what? When I first started, I made a lot of mistakes and I didn't have all these paperwork. Through my mistakes, I had my attorney draw these up, or I had to draw them up myself because I realized that, hey, I'm not giving this disclosure. I'm not doing this. I'm not doing this. I got to do this. I forgot to fill out the paperwork to change the insurance. I forgot to do this. I forgot to do this. Now I have a whole packet. Okay. So the hardest part is dotting the I and crossing the T. Okay. In my book, because there's so many moving pieces. But finding motivated sellers is not too hard. I actually have a course called Flipping Wednesdays where I teach you how to find motivated sellers for free. Now, there's a guy on YouTube that says, are you looking for motivated sellers? I'm paying $500 a month or per lead. Guys, I show you how to find deals for free in your backyard. It's called Flipping Wednesdays. Whenever you join my profit sharing coaching, you're able to get this Flipping Wednesdays for $138 versus $1,000. So when you join my profit sharing, I'm pretty much giving you my stuff for free because I want you to cash a check. Because whenever you cash a check, I cash a check. Doesn't get any better than that. So if you're new or if you're pro, if you want to do wholesaling, if you want to do fix and flips, you want to be a landlord, you want to learn how to structure deals where you don't have to use a lot of credit, you don't have to use a lot of bank loans or any of that kind of crap, and you want to just deal with homeowners direct, then join my profit sharing coaching, guys. It's only $83 a month. Okay. Once you pay that, we meet on a weekly basis. You get access to me one-on-one. We get to work with each other. We get to help you structure your deals, help you find your deals, the paperwork. I will even buy your own deals. When you find a deal, I will buy it. If I don't want to buy it, I will help you get rid of it, find an end buyer. So because whenever I help you and you get a check, I get a check. It's called profit sharing. I'm revolutionizing the real estate coaching industry because I have a skin in the game. If you don't win, I don't win. Simple as that. And then when you win, I win. So it doesn't get any better than that. Now you can go to some of these free seminars, which is just sales pitches. You go for a free seminar, they sell you a $400 product, then it's a $4,000 product, and then there's a $30,000 product. How do I know? I've been to them. I've been to many of them. When I started out in 2006, I didn't know what to do. My dad sold ice cream. My mom, illiterate. I didn't know what to do, right? But many years of action, many years of failure, I figure it out. And I'm willing to let you download my brain, guys, okay? So if you're interested in learning how to find deals in your backyard, join my profit sharing coaching, $83 a month. You get to work with me. We meet every Saturday. I look over your deals. I help you find the deals. I help you structure the deals. I help you fund the deals, whatever's required. Okay. I even buy your deals at mrnofluff.com. It's called Profit Sharing Coaching. Thanks for watching, guys. Click the like button, share the message. Let me know if you want to buy properties without a bank. I'm pretty interested. I, all right. Thanks, guys, so much. Have a great day. Peace.